Book TV is bringing you selected panels from the 2009 Brooklyn Book Festival. Panel 3 is a discussion on the current economic climate with Time Magazine business and economics columnist Justin Fox, weekly columnist for The Nation and The Guardian, Naomi Klein, and The Village Voice, the progressive and Mother Jones writer Kai Wright.
Good afternoon. Thank you all for coming. I think there may be a few seats in the front, but I can't, don't hold me to that, but I hope everybody can get comfortable. We're going to have a great discussion. I'd like to welcome you all. I'm Errol Lewis. I'm a columnist at the New York Daily News. I host a morning show on WWRL radio here in New York. And some fans here. That includes a book club that has a number of different volumes that we go through pretty regularly. Let me introduce our panelists, and then we're going to have a discussion about the economy, the state of the economy, who's to blame, and what we can expect as we try and get through these difficult times. Justin Fox is an economist and business, economics and business columnist for Time Magazine. Prior to that, he spent over a decade at Fortune magazine, including a stint as the magazine's Europe editor based in London. His first book, The Myth of the Rational Market, is for sale around here, I hear. Kai Wright is a Brooklyn-based writer. He's a senior writer for TheRoot.com and for a host of other publications. He's the author of Drifting Toward Love, Black, Brown, Gay, and Coming of Age on the Streets of New York. And Naomi Klein is an award-winning columnist and author of the #1 best-selling The Shock Doctrine, The Rise of Disaster Capitalism, which is being translated into 27 languages, I hear. So congratulations on that. Folks, we want to keep this a kind of a conversation, and then we'll invite you all to join us in the last 20 or so minutes. I'm curious, and I'd like to hear from each of the panelists. How did we get here? What do you think of where we are right now? There's a lot of talk about this being the worst recession since the 1930s. Others draw comparisons to other periods. Why, in your opinion, are we where we are? Who's to blame, if there's blame to be assigned? Was this inevitable? Was this cyclical? Did you see it coming? Why don't we start with you, Justin?
This is a funky mic. First of all, I mean, this is the worst recession since the Great Depression, at least in the U.S. Because I am sort of a data geek, and I like to look at all these releases when they come out from the Bureau of Labor Statistics and the like. And it's just, this has now surpassed the 70s recession, the early 80s recession. In terms of what, I mean, clearly this is a recession brought on by a financial meltdown. And, I mean, recessions happen, there are business cycles, and that's not ever going to be banished. But this particular severity of this one clearly had something to do with the rampant growth of the financial sector, and it's sort of, I don't know, going off on this tangent of its own that didn't have a whole lot to do with facilitating real economic activity. And that all collapsed, and that's happened before in different countries. It's happened before in the U.S. We're dealing with it differently this time, but and presumably somewhat better than in the 30s, but it's still pretty bad.
Okay.
I mean, I think certainly part of what brought it on is predation. We have been doing some reporting on it. I write for The Nation, and we cover a few communities that were targeted pretty hard in both subprime lending, and not just the subprime stuff, but the Alt-A and the whole host of junk mortgages. And what is striking about it is the way we've talked about this as though it's just a cultural problem, and that everybody is culpable in some way. Everybody from Wall Street to homeowners, they're all culpable in some way in this. And it's just not true. It doesn't hold up when you start looking at either the data or at real lives in neighborhoods where these loans were made. You see folks who, A, had been homeowners for a long time, had been responsible borrowers for a long time, and then were targeted to become irresponsible borrowers. And from the loan officers to the underwriters to lobbyists who, I mean, part of, did we predict this? I mean, several states predicted it and tried to pass laws to prevent it, and faced aggressive lobbying to get those laws repealed. So I think a big part of this is predation, and I think that's an important thing to keep in mind as we talk about what are the solutions.
I agree with what the previous speaker said, and I certainly.
Are we on?
Is this mic on? Is it on now? Is it on now? It is on now. Okay. Yeah, I'm going to try not to repeat with what Justin and Kai just said, because I largely agree with it, and I think Kai's point is particularly important, that this language of shared responsibility is particularly insidious, because if it is everybody's problem, then it's nobody's problem, and there has been really total impunity for the people who are responsible. I mean, besides Madoff, there haven't been any prosecutions, and there haven't been any corrections. The New York Times has been reporting over the past couple of days that the financial sector has not been re-regulated, and so we have lost, and this is what's particularly important for us to understand at this 1 year mark, because we are at exactly 1 year from the collapse of Lehman, the collapse of AIG. This week was the horror week a year ago, and what we know from our own financial lives and what we know from the actions of huge institutions like the International Monetary Fund is when people really need bailing out, or countries really need bailing out, that's a moment of extraordinary leverage on the part of the people who are doing the bailing out. You can ask pretty much anything under the sun when you're handing out billions of dollars, let alone trillions of dollars. And what we see 1 year later, after this bipartisan bailout of the wealthiest sector of our society and the abandonment of the most vulnerable sectors of society in terms of homeowners and people who've lost jobs, is that leverage was totally squandered. The trillions were handed out and nothing was asked in return, and not just in terms of what are you going to do with the money, but how will you change your behavior to prevent a crisis like this from happening. So yeah, when you throw trillions of dollars at anything, you will get a temporary fix. But as far as I'm concerned, we're still very much in the crisis. The crisis is not over. And the other thing that I think this has really revealed is an incredible double standard in when we cry crisis, because of course many communities were in crisis before a year ago last year and continue to be in crisis, but all of the urgency is being lost because Wall Street is feeling so much better and the good times are rolling again.
The president, in fact, will be speaking on Wall Street tomorrow, in part in commemoration, I guess, of the meltdown a year ago. But let's try this. I'd like each of you to give us your short list of what the media in particular should be covering. I mean, what is being overlooked? If this language of shared responsibility is inappropriate, what might be some ways to maybe draw out some of, to sort of sharpen the story and make sure that we're informing people about who is to blame?
Well, I always like to blame Larry Summers, but I'll let the other. It's just my thing.
Yeah, because my thought was I want someone who's not in the middle of the mainstream media like me to start answering that question. But I mean, I think you're absolutely right, Kai, that this, at some level, I go crazy with all of the Goldman Sachs conspiracy theories. But on the other hand, just sort of, oh, we all failed together is a really lame response to it. And I think in general, especially in terms of like the business media, electronic business media, and to a certain extent the print media, although with all these commemorations the last few days, the question's been raised more often. There really hasn't been any attempt to say, okay, this is your fault. Or maybe this isn't this person's fault, but this is this practice's fault. How do we make sure this doesn't happen anymore? And I mean, and it's the kind of thing, I'm sure there are people out there writing this. I'm sure it's being focused on somewhat, but you pass that moment of crisis. I mean, I wonder, Naomi, is the problem that Hank Paulson did not believe in the shock doctrine and failed to use it against the banks?
Hank Paulson believed in the shock doctrine, and it had a $700 billion price tag attached to it. But this is, for those of you who aren't familiar with the thesis of my book, it's that extreme right-wing ideology, but in particular what I'd call corporatism, not free market ideology, but these massive transfers of wealth from the public to the private, take place historically in moments of extreme crisis, when we are panicked and when we tend to want to believe that there's a group of all-knowing experts out there who understand this very, very complex stuff much better than we do, so we should just sit back and trust them. I think the confusing thing about this crisis is that it was so obvious that it was created by extreme right-wing market ideology that everybody was claiming to be renouncing it at the same time as you had this absolutely unprecedented heist of public money and transferred into private hands. So I think people thought that action was being taken and correctives were being put into place. And so, yeah, the Cato Institute and others issued papers going, you know, this is the socialist shock doctrine. But this isn't socialism in any way, shape, or form. It's intervention in the market on behalf of the elites. And as it happens, you needed to throw out the free market ideology in order to rationalize this intervention, because you couldn't have done it otherwise. But in the same way that during good times, free market ideology rationalizes laissez-faire in the interests of the elites, during a crisis, it has rationalized this unprecedented transfer of wealth. But I think this crisis has absolutely been exploited in the way that I describe in the book. And Hank Paulson was really I mean, just so blatant about it. If we remember that wonderful 3-page memo where it was just kind of like a ransom note to the country, right? And give me $700 billion, and this can't be reviewed by any branch of government or any court of law, right? I mean, there isn't much more of a blatant example of this exploitation of crisis in order to get both money and power than that particular 3-page memo, which thankfully was amended because of public uproar.
Right. I've always wondered why Paul, because he knew Congress had to know Congress would react that way. I guess the one thing I'd throw out there is I'd still rather that they did that last fall than that they didn't, because I have this feeling that there might have been this complete falling apart of the financial system that could have led to shock doctrines from either side. But I totally agree that because of the seeming temporary success of the bailout, now suddenly the sort of political force to do something about the Wall Street practices that brought us here in the first place is gone. So I'm kind of stuck in the middle there, because I really did not want to experience what would have happened if there hadn't been some sort of backstop last fall.
But that assumes that this was the only alternative, right? I mean, I don't think anybody was advocating doing nothing. The question was what was
the Cato Institute was.
They waited a while before they started advocating it, after they had already allocated the money. But the issue is, who are you going to bail out? And this is, I think, what's heartbreaking about it, when we remember that this was what Obama was saying 1 year ago, was that we can't just bail out Wall Street. We can't have a top-down bailout. We have to have a bottom-up bailout. And there were all kinds of ideas that were being advocated by people like Sheila Bair about the need to bail out homeowners that could have had the same stabilizing effect without what we've seen, which is this deepening of inequality, which in many ways is at the root of the source of the crisis. So I think we need to reject the idea that that the choice was between doing something and doing nothing, and because the something sort of worked, that justifies it, because that was never the choice.
I think we also need to reject the idea that this is something that we did in the past, right? I mean, one of the, getting back to the question about how we're covering it, one of the frustrating things is this assumption that it's over, and that there's no, that we've done a fix. We spent all the money last year and now it's over. And the reality is that we are seeing 360,000 foreclosures a month. And it went up 7% this month, which is in a 32% over the last year, and it's going to keep going up. And so we are still bleeding. And we are particularly bleeding in communities that were targeted for this predation, in urban communities, in Black and Latino families. We are bleeding still, and we to this day do not have a plan on the table to deal with that. We have the smaller version of the bailout is the $75 billion that the Obama administration decided to give to mortgage servicers to try to convince them to stop foreclosing, to give them incentives to work with borrowers as opposed to rushing to foreclosure. It has not worked. It simply hasn't worked. The Treasury data, the numbers sound great on their face, you know, that, oh, we've got 85% of servicers are involved in the program, and they've offered some hundreds of thousands of offers have gone out. But 1 month's foreclosures overwhelms the progress made in the entirety of the program to date. And even if it achieves its goal of helping 3 million borrowers, that'll barely cover the foreclosures this year. And so the bottom line is that we have, from President Bush's on through President Obama, we have decided that we're going to deal with this voluntarily. We're going to tell banks and servicers and the entire home loan industry, we're going to give you incentives to fix this, and it has not worked. We are going to have a more heavy hand in this. And the bailout was we can debate it, but that was then. And I think that we really, in terms of the coverage, now need to be talking about what has to happen today. What do we still have to do to stop all these foreclosures?
Have you or anybody else seen a model program that looks hopeful, that would go more to the root of the problem and address the actual homeowners as opposed to the many people in the chain that don't seem to want to help them?
There's a lot of ideas out there, and we can, you know, and there's been a lot of back and forth debate. I think that the central concept is that something has to be done to give borrowers more leverage. That the only people who can have any chance in when they start getting in trouble are people who go get a lawyer, and most people don't have a lawyer. And so there has to be something from the top that gives the borrower greater leverage in negotiations with the banks. And again, this is why the original point is important, that this started with predation. These are people who got into this situation through predation. And also, regardless of what, even if we don't believe in that, the communities are being rotted out because of these foreclosures. And so we have to give borrowers a heavier hand in negotiation with the banks. One theory of that was bankruptcy reform, was to allow it. So currently you can modify your loan. If you have a loan for a boat or a second home, or you can get in bankruptcy and a judge can modify the mortgage. You cannot do that on primary residence. That's a carve out for industry that they've written in. There was a proposal to get rid of that carve out. Senate Democrats voted it down. And the result is that we don't have any. We still have foreclosures coming apace. There has to be something to give borrowers more leverage, and so we need to come up with an idea of what that's going to be. If it's not going to be bankruptcy reform, which it should be, we need something.
Well, now,
Can I just one point that I think, you know, when we look at the failure to regulate the financial sector, the failure to deal with the foreclosure crisis, and now the crisis in healthcare reform, it seems to me that the issue, the meta issue, the issue before any other issue is political and campaign finance reform. I mean, it's almost like, you know, we can talk about all kinds of wonderful ideas that we have, and just knowing full well that none of it will happen, just as we've seen all of these fantastic ideas either defeated or taken off the table before they were even on the table because of the outrageous power of the lobbyists in Washington. And I think this needs to be the mass movement of our time, because no other movement matters unless we deal with the corruption of money in politics.
well, we're anticipating a Supreme Court decision on that very topic, which may or may not help address some of those issues. But what do people think of the 2010 elections? I mean, in theory, since everyone in the lower house of Congress and a third of the Senate have to go back to the people and get themselves reelected next year, this would be a chance for millions of foreclosed homeowners and for others to make their voices heard, make their wishes known. Do you foresee any hope toward re-regulation or a change in the conversation?
I mean, everything I've seen well, and you just can't tell at this point, because what the polls are saying, it'll depend a lot on the economy next year, everything else, but it seems like most of the political movement is in the opposite direction of that right now, which, doesn't bode well for your re-regulation, I would say.
I mean, I think one of the things that I've found most striking about 2009, and this is something that I've heard Naomi say before, is how passive the progressive community has become. And you know, when I think about the healthcare town hall forums, and I think of all of this anger around healthcare, nobody has more reason to be disrupting forums and shouting down presidents than black people around healthcare. I mean, we've got, you name the indicator, and African Americans are far more likely to both get it and die from it. And yet we hear nothing from the black community about it. I think that a lot of folks, whatever their political party, who invested greatly in 2008 felt like their job was done. And that at the end of that, we sit back and now we've bought our president. We sort of deal with politics as consumption. We bought our president, and now he'll go off and deal with it. And we'll sit back and wait. And I think that that's a recipe for disaster.
I assume that we're all Keynesians here, or at least we're familiar with the idea that what's most missing right now in the economy and the need for the stimulus is based on this decline in spending. So with spending down and savings up by individual households, that seems to be what the data suggests, are we going in the wrong direction? Are people doing what might be in their best individual interest, but actually sort of slowing down the economy at the same time? And how long is this likely to last?
I mean, I think people should do what's in their own individual interest, and that's why we have governments to make collective decisions that aren't necessarily, that matter on the government side. And I think that was always Keynes's argument as well. So if you have this long period of everybody rebuilding their savings, then it really would make a lot of sense to have government investing in things that haven't been invested in for the last 25 or 30 years. And at the same time, I mean, clearly, I am not a good remembering data at moments like this guy, but consumer spending as a portion of the overall economy in the U.S. it used to be in the low 60s, maybe even high 50s in the post-World War II era, and then it just started this steady rise in the early 80s, and it's been above 70% of the economy the last couple of years. And I mean, there's no law that says that can't be, but it doesn't seem to have worked out very well. So it would probably be better if we replace that 80% with more government spending. I mean, government spending and business investment are the two things that can take that slack.
But I mean, I always worry a little bit when we look at it from the consumption end, because so much of there is an overconsumption problem in this country, and people do try to shop their way out of crises, and that's not necessarily good either for the planet or for individual households, because they end up carrying more debt. So I think, I mean, really what we've lost is the Keynesian idea that you could deal with it from the jobs perspective as opposed to from the consumption perspective. And that to me has been the most striking missing piece. I mean, at least there's a discussion about what maybe we should be doing to stop foreclosures, but we really aren't talking at all about what we should be doing to stop layoffs and keep and protect good jobs in this country. There's no talk of it. And really what this crisis has ended up is starting to look like is just the final decimation of the manufacturing sector in this country. That's one of the lasting effects of this crisis. And I always think in terms of lost opportunities, but also an example of what a really progressive stimulus program would look like. I always think about that remarkable factory, Republic Windows and Doors, where the Chicago factory, 250 workers were laid off right before Christmas, 3 days notice. They were making windows and doors, and they refused to be laid off. They decided that this was wrong, and they occupied their factory and protected the machines with their bodies. They slept there, because what happens when a factory is closed is that the machines are auctioned off, the parts are auctioned off in order to pay the creditors. They said, we're creditors because this company owes us money. But more than that, they also followed the money and realized that the reason why they were being fired was because Bank of America had not given a loan to their factory owner. And of course, by this point, Bank of America had received $25 billion in bailout funds in the name of more lending. So these very smart workers and their very smart small union, and I say small because I think part of this has to do with the actual real democracy within this workplace that often is missing when you have very large unions who are less interested in workplace democracy. They decided that they were going to make the issue Bank of America and the bailout. And if we all remember this, but I think it's worth remembering again those fantastic signs: you got bailed out, we got sold out. But what was so striking about this was a company that clearly could have been part of the new green economy, right? And they kept it open, and now they have a buyer who's come in. He's getting some stimulus money because there's part of the stimulus money is going to retrofitting homes and businesses using more energy efficient windows and doors. So there was no reason, no logical reason why this factory should have been allowed to close. And it was because of direct action that it stayed open. They found a buyer. But if you look at this as an example, it actually is this little window into what a progressive bailout would be. So to me what this says is, why don't we have a bailout that before any factory is allowed to close, there have to be two questions asked. One, some sort of a green audit done that asks, could this factory in some way be retrofitted to be part of this new green economy we keep hearing about? And what sort of investment could be made, what sort of targeted investment, technological investment could be made to change a factory, to change an auto parts factory into a factory that could be making subway cars, for instance, right? And also, if the owners don't think that's profitable enough, do the workers want to turn it into a cooperative? And that would be a situation where you need legislative reform so the workers become the first creditors as opposed to the last creditors, right? So imagine if this was happening across the board. That's a bottom-up bailout. That's protecting jobs, and it means that when people shop, they're actually shopping with money they have as opposed to money they don't have and debt they're accumulating. And we're not hearing about any of these ideas, but they're out there.
When we talk about re-regulation, there's been a remarkable set of revelations around the Bernie Madoff Ponzi scheme about what he got away with, literally under the noses of the SEC, and how state regulation was used to aid and abet this. A number of different schemes, not only by him, but by many of the insurance companies. What do you think are the prospects for re-regulation, and what's the role that the states need to play in that whole process?
Well, I guess I think the prospects for better regulation of scammers like Bernie Madoff are pretty good now, just because there's actual people at the SEC are happy to be working there again. They're part of an administration that doesn't totally denigrate. You need people to do that. So that kind of regulation, I think that's going to work better. There's going to be lots more. The IRS is going to be tougher on people. The SEC is going to be tougher on people. The bigger questions of how our financial system is supposed to look and what different institutions are allowed to do, how big they're allowed to get, none of that's really been dealt with at all. And that is the kind of thing with every passing month it seems less likely that it gets dealt with.
Sometimes it seems like New York and our Attorney General in particular, both the current and the former Attorney General, seem like the main state actors who want to step into the middle of this national conversation.
Well, sometimes just the main actors, period. Main government actors of any kind. Definitely with Spitzer back then, there was nobody else.
Yeah, are we just lucky, or is it a perception issue? But there are 49 other attorneys general and a whole bunch of bank and insurance regulators all over the place. Do none of them want a piece of this thing?
Well, the Massachusetts Attorney General is big on this too. But I guess it works better if you are in the media center and can get a lot, and also in the scam center too. Yeah, I don't know. That is a very weird phenomenon of the past decade, that New York State Attorneys General have been sort of the lead regulators of the financial system. I don't think that's probably the best way to do it, but I guess it's better than nothing.
Well, but it returns to your previous point. 40% of New York's economy became Wall Street. And that's just an unsustainable economy by anybody's measure. And so there's more reason to do it here.
Right.
They would have frankly been laying down on their job had they not been working really hard to deal with Wall Street regulation, because it was this gargantuan share of our economy.
It may be too early to start talking about lessons learned, but I often wonder if we have changed permanently as a nation, at least for the foreseeable future. When you talk to people who lived through the Great Depression, they have some very interesting precepts around savings, around hard work, around the role of government that really stamp them as a product of their time. What do you think we're going to take away as a nation from this current experience?
You know, it's really actually quite an interesting question. I mean, I just, never mind the sort of big, broad picture stuff. I just think about myself and my colleagues and friends. And, you know, I entered the workforce in the mid-'90s. And I remember just jobs were everywhere. And I felt like, oh, I could do anything I wanted to. I didn't have to worry about any kind of security, long-term or short, because within a month, somebody's going to call me and offer me a job. And everybody I know had that experience, and that shaped our understanding of the world and how we moved through it. And I do wonder what the long-term effect is of having had that pulled out from underneath us, and people coming out of school now who face a world without jobs. I don't know, but I wonder if it will in fact have a long-term cultural impact.
My fear is that one of the ways in which this crisis and this year of raised hopes and dashed hopes, you know, one of the things that it could leave us with is cynicism, like terrible cynicism about the possibility of political change, and that's what I find most frightening when you think about this whole generation of young people that were so energized with the last election, and because, as Kai said, you know, we have such a consumer. We don't really study how movements actually are built. We don't really understand how social change actually happens. We still have this very consumer idea about political change. You know, I paid for change, you know, or I went to a protest and the war didn't end. Why not, you know? And so my worry is that people are just going to be like, yeah, I kind of want my money back. And not that it turns into right-wing rage, because I think that's a different source, but that it turns into, that's the last time I'm going to deal with these jerks, you know. So that's my fear. My hope is that there's going to be a kind of a back to basics, where movements are going to be built once again on the issues and based on principle, as opposed to everything being about elections and party politics. I mean, I think this is something, I'm Canadian, and I think it's one of the things that Americans lose sight of, because you're in the middle of it, is just how odd it is to be constantly in election mode. You know, you were saying, well, what about 2010? I'm not sure we should be talking about 2010 yet. I mean, I think maybe we should be talking about Copenhagen and the fact that we have the most important climate summit coming up in 2 months. And if the Obama administration isn't making good on the hopes that they raised, living up to the hopes that they raised about a real change on climate policy, then we need an energized environmental movement, and with very clear principled demands, and to stop thinking like pollsters for a while and strategists for a while, because I think the Bush years have left us with this. Our desperation to get the Republicans out of office has co-opted a huge amount of, you know, independent media, independent movements, where we all just think about elections now, which isn't actually normal. You know, in most parts of the world, you have, you know, anti-war movements that are worried about ending wars, less worried about elections, and environmental movements that are really focused on environmental policy. So I'm hoping that that will change. And one of the things I see in talking to college-age activists these days is one of the lessons that they took away from the collapse on Wall Street is, if you really care about something, do not leave it to financial speculators. That's important, because that is the way...
We once knew that.
The way we have been told we should deal with the climate crisis, right? Carbon trading, cap and trade, market-based solutions. You know, this is Larry Summers' idea of how to deal with climate. And now I think we've got a generation of young people who are going, no way, and are coming up with more sort of basic slogans about fossil fuels, like leave it in the ground, don't trade it, don't build a derivatives industry around it. And that, to me, is a very, very good sign, I think.
Well, and that's kind of because this rise of market fundamentalism, if you want to call it that, over the past 30 years. Naomi, I've been reading The Shock Doctrine the last couple of days, and it's told as a as a power play, and that's definitely part of the story. But it was also, and this is my little segue into getting to my book for half a second, it's also this story that there were these beautiful theories. And it was sort of this scientific movement, and there were people in it who didn't see themselves as conservative warriors at all. They just thought they were doing beautiful things with math to show how financial markets work. And one of the really interesting things over the next few years is where economics and where financial economics goes, because those theories didn't work so well. And I'm not entirely clear where things go next, and there's been a lot of sort of false starts, because Naomi's good friend Larry Summers, he was actually in the early 80s one of the big critic of all these elegant theories of perfect financial markets. And then he just sort of, as he's gone into public life, decided, well, you know, whatever. And so that I don't have an answer there, but one would hope that an event like this would cause lots of younger people studying for their PhDs in economics to start figuring new ways to look at the world, and then you'd have new theories handy for whoever's trying to push things in different directions.
Mm-hmm.
I mean, to further the point of your book, I mean, one of the important points about these theories, correct, is also that people got rich on them, right? The people who had the theories, the academics, got rich on them.
Including Larry Summers.
Including Larry Summers. And that's part of how these ideas become, these neat ideas that don't work in society have the staying power because they make people money.
Yeah, and that is actually my one concern about this idea of the reinventing of economics. Robert Skidelsky, the biographer of Keynes, has been pushing this idea lately that if you want a PhD in macroeconomics, you've got to be studying English and politics and history and all these other things too. But the problem from the perspective of the academic economics and academic finance is economics professors get paid a lot more than history professors or sociology professors or English professors. And so it's really in their interest to keep it as this narrow, hard to understand discipline.
But I mean, it's a crucial point that Justin's making, because there are two really distinct and interrelated components to the revolution in economics. One was the theory revolution about laissez-faire, the revival of laissez-faire economics as opposed to Keynesianism. But the other was this war between the numbers people and the people the numbers people derided as the essay writers, who were the Keynesian economists. And it was the triumph of the complex mathematical models. And one of the things that I think we need to take from this crisis, learn from this crisis, is how dangerous to democracy it is when all but the tiniest sector of society feels that the most crucial question of any society, which is how do we allocate our resources, is too complicated for them to weigh in on, because it is all based on these complex mathematical models that are dreamed up in the basement of the University of Chicago Economics Department. I mean, that's another thing that it's not just profitable for them, it's also fantastic for their power, because I mean, part of the message is lay people don't have a right to have an opinion on economics. So the other piece of the puzzle in all this was a kind of a silent coup d'etat within governments, where you take out more and more, you carve out more and more of what we used to think of as governing, and say this shouldn't be left in the hands of elected politicians because it's too complicated. It has to be left to the economists. So in country after country, you have central banks that were taken out of the reach of elected governments and turned independent and given to people, independent thinkers like Alan Greenspan, for instance, right, who of course have no ideology. They're just numbers guys.
Often saying things that are the opposite of common sense, right? It's the driving of common sense out of the public debate through creating elites to talk about it.
Well, in the spirit of bringing the people into the conversation, those of you who have questions, signal by hand and we'll get a microphone to you. Because it's being recorded, we want to make sure you speak into the mic. Yes, ma'am.
I've been reading a book by an Italian author, Roberto Saviano, called Gomorrah, in which he talks about the amount of money that the criminal syndicates have at their disposal to move from criminal activities into business, into ownership, into entrepreneurship, all the way around the world. And I'm just wondering why it is that you in the panel assume that a lot of the activities going on in the financial sector are legitimate and not criminal.
I don't think any of us
criminal.
assume that.
I mean, define criminal, and first, but I don't, well, I don't know. I mean, I've got to say, I think you can create more than enough mischief in financial markets without criminal syndicates involved. They may be there, I don't know.
Yeah, I don't know, but I certainly wouldn't say that I would assume that what was going on wasn't criminal. I think it was. I mean, now, it didn't violate the law, but that's because they lobbied to get the laws changed so that they wouldn't violate them. I can't speak to the book you read or what illicit syndicates exist, but I think it's important that we do think about what was going on Wall Street to be a crime.
I should mention that. There's also just some straight up criminal money. Just in terms of, I've spent a little bit of time in Latin America and looking at economies there, and there it's everybody's sort of much more open about, yeah, like this is drug money, and then it was cleaned up and put into the regular economy, which happened on a massive scale in Colombia over the past 2 years, where the Colombian economy has done better than other economies in Latin America precisely because Uribe allowed just billions of dollars of narco money to be brought into the Colombian stock exchange. This is absolutely out in the open. People know it. And that money then becomes another bubble for people to speculate on. Another example of this is the incredible role of the Russian oligarchs in the global economy. This is dirty money. We all understand that it was made corruptly. And now those same oligarchs are going around buying flagship newspapers around the world, to just cite one of their major influences. So that money gets cleaned up. But I think that this is a very old story. I mean, that's the only thing I would add, is that a lot of I mean, my country, Canada, some of our richest family are the Bronfmans. They made their money in Prohibition and we bootlegging. So it's kind of an old story.
Indeed. Sir.
This is for Ms. Klein. I'm also Canadian, so it's a little off topic, but I just want to talk about the Toronto Film Festival. I just thought that you're leading the protest against it was amazingly courageous. It was just, there's a film festival in Toronto right now, and she's leading the boycott against because of the Tel Aviv inclusion. What's that?
It's not actually a boycott. It's just
it's a protest. I'm sorry. I'm so sorry. It's so courageous because you dove into the whole issue, even though that you knew that this article that you wrote years ago about that you're a self-hating Jew and that you believe that Israeli men masturbate to Holocaust pornography. Remember that?
No, I didn't write that.
You actually did write it. It's on the internet, and everybody can see it.
We're not going to change the topic at this point in the conversation.
I'm so sorry. I'm sorry, Ms. Klein. The question was,
thanks for coming.
How do you have the big balls to do that? I mean, it's amazing.
Take the microphone away from him.
This is on C-SPAN, everybody.
Any serious questions here? Yes, I think we've got one in the back there.
Yes, hi. On the idea that the financial crisis is far from over, I'd like you guys to address the idea that the toxic assets and the complex derivatives that I don't know, they're still on the books of the financial institutions, right? I don't know who's unwinding them, and I'm wondering how big the obligations are that are associated with them.
Yeah, again, I can't remember numbers like that. I mean, my sense is those are the kind of things that with the passage of time, they work themselves out, but they remain this big risk factor there until they're all gone, and they're not. It seems like in the U.S. financial system, though, a lot of those assets, the value of them has been marked down enough on the books that the risk it's there, but it seems like the bigger risk is just lots of banks made lots of loans on commercial real estate that are never going to get paid back. And that's the big thing going forward, more than a lot of these. So we bail out the banks again, right? Well, it's going to be. I mean, the banks that are in the most trouble in that are sort of the mid-sized to smaller banks. And yeah, there's going to be lots of bank failures. It's going to be a different kind of bailout. It's not going to be a big TARP thing. It's going to be through the FDIC, and to a certain extent, banks have done this since the beginning of time. They get in these messes, and there's this, sometimes the best thing to do is to shut them down and start over. Sometimes it works out fine to let them work through these bad loans and survive. And right now we're going for door number 2 and hoping it works.
I think we can get in one more.
I still sort of believe in the good intentions of the Obama administration, and maybe it's partially self-delusion, and maybe it's partially the, best for my mental health to believe this. But I guess what I wonder is, what does the administration really think the underlying value is in what the financial industry is doing? What a base is it adding to society, and do they think that this is not only desirable but sustainable as a system of wealth creation? I don't actually know if it does something productive for society, but I'm just wondering what you guys think.
Well, I think financial systems are essential to the kind of economy we run, and in the right place, they are helpful. They're not productive in and of themselves. They just, what they're supposed to be there for is intermediaries helping make other economic activity happen. And I think the problem in especially the US and the UK over the past, really it's more than the past 10 years, like the past 30 years, is they've grown into these entities just that have this whole logic of their own. And I can't speak for the people in the Obama administration. I think the struggle they have is they feel like, okay, this has value. We don't want it all to shut down at once. And clearly, there are all these regulatory suggestions they've come up with which would have the impact of shrinking the financial system some, but they're not willing to go for anything more radical. I don't know that I would be either, but others here might be.
But I mean, I think that a huge amount of their response was driven by fear and just not wanting to be the ones that oversaw a deeper market crash. And even the appointment of somebody like Summers and Geithner, I mean, these were messages of reassurance to the market, of don't worry, there isn't going to be a radical change, and that stabilizes. It's kind of short-term thinking, but I think that it comes back to what Justin was talking about before. If they hadn't have acted, it could have been apocalyptic. So I think that that was probably a major motivator. But I think rather than speculating on good intentions or bad intentions, I think if you do believe in Obama and want him to live up to the hopes that he raised, which I think so many of us do, then he doesn't need your faith. He needs your pressure. And he has said that really, really clearly. And so it isn't in any way a gift to him to just say, I believe in you, I believe in your good intentions. It comes back to that great FDR anecdote, maybe apocryphal, that Eleanor Roosevelt used to say about when civil rights leaders or labor leaders or somebody with some progressive demand would meet with FDR and talk about what they wanted. He would hear them out and say, I think that sounds like a great idea, now get out there and make me do it. And this is where it comes back to the need for independent movements that are not just arms of political parties, but are very, very clear and principle-based, and make his life easier, because these are the dynamics that brought the New Deal in this country. There was so much pressure from the grassroots for radical change that the New Deal was able, that FDR was able to sell the New Deal to the elites because the alternative looked like revolution. And those are the only dynamics that have ever brought real social change to not just this country, but any country, progressive social change. And we need to remember how to build independent movements again. We've lost the knack.
That is going to be the last word. I want to thank all of the authors. Naomi Klein, author of The Shock Doctrine. Justin Fox, author of The Myth of the Rational Market. Kai Wright, author of Drifting Toward Love, Black, Brown, Gay, and Coming of Age on the Streets of New York. I hope you all enjoyed the panel. The authors will be around to sign their books and for further conversation. Thank you so much.
Book TV is bringing you selected panels from the 2009 Brooklyn Book Festival. Panel 3 is a discussion on the current economic climate with Time Magazine business and economics columnist Justin Fox, weekly columnist for The Nation and The Guardian, Naomi Klein, and The Village Voice, the progressive and Mother Jones writer, Kai Wright.
Good afternoon. Thank you all for coming. I think there may be a few seats in the front, but I can't, don't hold me to that, but I hope everybody can get comfortable. We're going to have a great discussion. I'd like to welcome you all. I'm Errol Lewis. I'm a columnist at the New York Daily News. I host a morning show on WWRL Radio here in New York. And some fans here. That includes a book club that has a number of different volumes that we go through pretty regularly. Let me introduce our panelists, and then we're going to have a discussion about the economy, the state of the economy, who's to blame, and each of the panelists. How did we get here? What do you think of where we are right now? There's a lot of talk about this being the worst recession since the 1930s. Others draw comparisons to other periods. Why, in your opinion, are we where we are? Who's to blame, if there's blame to be assigned? Was this inevitable? Was this cyclical? Did you see it coming? Why don't we start with you, Justin?
This is a funky mic. First of all, I mean, this is the worst recession since the Great Depression, at least in the U.S. Because I am sort of a data geek, and I like to look at all these releases when they come out from the Bureau of Labor Statistics and the like. And it's just, this has now surpassed the 70s recession, the early 80s recession. In terms of what, I mean, clearly this is a recession brought on by a financial meltdown. And, I mean, recessions happen, there are business.
What we can expect as we try and get through these difficult times. Justin Fox is an economist and business, economics and business columnist for Time magazine. Prior to that, he spent over a decade at Fortune magazine, including a stint as the magazine's Europe editor based in London. His first book, The Myth of the Rational Market, is for sale around here, I hear. Kai Wright is a Brooklyn-based writer. He's a senior writer for TheRoot.com and for a host of other publications. He's the author of Drifting Toward Love, Black, Brown, Gay, and Coming of Age on the Streets of New York. And Naomi Klein is an award-winning columnist and author of the #1 best-selling The Shock Doctrine, The Rise of Disaster Capitalism, which is being translated into 27 languages, I hear. So congratulations on that. Folks, we want to keep this a kind of a conversation, and then we'll invite you all to join us in the last 20 or so minutes. I'm curious, and I'd like to hear from you.
Cycles, and that's not ever going to be banished. But this particular severity of this one clearly had something to do with the rampant growth of the financial sector, and it's sort of, I don't know, going off on this tangent of its own that didn't have a whole lot to do with facilitating real economic activity. And that all collapsed, and that's happened before in different countries. It's happened before in the U.S. We're dealing with it differently this time, but and presumably somewhat better than in the 30s, but it's still pretty bad.
Okay.
I mean, I think certainly part of what brought it on is predation. We have been doing some reporting on it. I write for The Nation, and we have covered a few communities that were targeted pretty hard in both subprime lending, and not just the subprime stuff, but the Alt-A and the whole host of junk mortgages. And what is striking about it is the way we've talked about this as though it's just a cultural problem, and that everybody is culpable in some way. Everybody from Wall Street to homeowners, they're all culpable in some way in this. And it's just not true. It doesn't hold up when you start looking at either the data or at real lives and neighborhoods where these loans were made. You see folks who, had been homeowners for a long time, had been responsible borrowers for a long time, and then were targeted to become irresponsible borrowers. And from the loan officers to the underwriters, to lobbyists who, part of, did we predict this? Several states predicted it and tried to pass laws to prevent it, and faced aggressive lobbying to get those laws repealed. So I think a big part of this